What if I told you that you could invest in Bitcoin without even owning Bitcoin? No crypto wallet, no foundational phrases, no fear of losing your password and watching your savings disappear forever. Sounds too good to be true? Well, in January 2024, the U.S. Securities and Exchange Commission, SEC, approved something the crypto world had been waiting for over a decade, the Bitcoin ETF. And it changed everything. In this video, we'll take a look at what exactly a Bitcoin ETF is, why it's important, who it's for, and whether you should actually care. Stay with me, because by the end of this video, you'll understand one of the most important financial products of the decade. Let's dive right in. What is an ETF? Before we talk specifically about a Bitcoin ETF, we need to make sure we understand what an ETF actually is. Because if you don't know what an ETF is, the Bitcoin part won't make much sense. ETF stands for Exchange Traded Fund. Think of it this way. Imagine you want to invest in gold. You could buy a gold bar and store it at home, but that's inconvenient, risky, and frankly, a little weird. Instead, you can buy shares in a gold ETF, a fund that holds the gold on your behalf and whose shares are traded on a stock exchange, like Apple or Tesla. You get access to the fluctuations in the price of gold. You can buy and sell easily. You don't have to store anything. Simple. ETFs work the same way for many different assets: stocks, bonds, commodities, real estate. They're one of the most popular investment vehicles in the world, with trillions of dollars invested worldwide. So when we say Bitcoin ETF, we mean a fund that holds Bitcoin or tracks the price of Bitcoin and whose shares can be bought and sold on a traditional stock exchange. That's it. Simple concept, huge implications. What is a Bitcoin ETF exactly? Okay, now let's get to the specifics. What is a Bitcoin ETF? There are actually two main types. Let me explain both. The first type is called a spot Bitcoin ETF. This is the real deal. A spot Bitcoin ETF actually holds actual Bitcoin. The fund buys and holds actual Bitcoin, and when you buy shares in the fund, you get direct access to the actual price of Bitcoin, one for one. If Bitcoin goes up 10%, your shares go up about 10%. If Bitcoin goes down, your investment goes down too. The second type is called a Bitcoin futures ETF. This ETF does not hold actual Bitcoin. Instead, it contains Bitcoin futures contracts, which are essentially agreements to buy or sell Bitcoin at a specific price in the future. This creates a small performance difference compared to actual Bitcoin prices, and it also comes with additional costs and complexity. For years, the SEC only allowed Bitcoin futures ETFs in the United States. The first was the ProShares Bitcoin Strategy ETF, which launched in October 2021 under the ticker BTO. At the time, it was a huge deal. But the real milestone, the one everyone had been waiting for, was the approval of spot Bitcoin ETFs. And it finally happened on January 10, 2024, when the SEC simultaneously approved 11 spot Bitcoin ETFs. BlackRock, Fidelity, Invesco, ARK Invest. These are some of the biggest names in traditional finance, and they all launched Bitcoin ETFs on the same day. The cryptocurrency world was shaken. Benefits of Bitcoin ETFs. Now let's talk about the benefits of a Bitcoin ETF over buying Bitcoin directly, because there are some really good reasons to choose an ETF. Number one is simplicity. You don't need a crypto wallet. No initial phrases, no hardware wallets, no worries about which exchange to use. If you already have a brokerage account, you can buy a Bitcoin ETF in less than a minute. Number two is security. An ETF's custodian, like Coinbase Custody, uses enterprise-grade security to protect your Bitcoin. You don't have to worry about getting hacked or losing your private keys. Many people have lost their Bitcoins simply because they forgot their password. That can't happen with an ETF. Number three is tax benefits. In the United States, for example, you can hold a Bitcoin ETF in a tax-advantaged account, such as an IRA or Roth IRA. This is a huge advantage for long-term investors. Holding Bitcoin directly in a crypto wallet doesn't give you that advantage. Number four, regulatory protection. As a registered investment product, Bitcoin ETFs have a level of regulatory oversight and investor protection that direct ownership of the cryptocurrency doesn't. Number 5, familiarity. For traditional investors, your parents, grandparents, financial advisors at big banks, ETFs are a familiar, trusted format. This significantly lowers the psychological barrier to investing in Bitcoin. These are real, significant benefits, especially for people who are new to cryptocurrency or who are professional money managers. Cons and risks. Of course, nothing is perfect, and no good video would be complete without talking about the drawbacks and risks. First, you don't actually own Bitcoin. You own shares in a fund that owns Bitcoin. For many people, that's fine. But for crypto purists, people who believe in the not your keys, not your coins principle, this is a fundamental problem. If something goes wrong with the fund, you're exposed to counterparty risk. Second, fees. Even a small 0.25% annual fee adds up over time. If you hold Bitcoin directly, there's no annual fee. Over 10 or 20 years, that difference can add up. Third, there's no access to the crypto ecosystem. When you hold real Bitcoin, you can use it. You can send it, use it in DeFi protocols, earn income on it, and spend it. ETFs can't do any of that. They're purely a price influencer. Fourth, Bitcoin itself is still very volatile. An ETF does not reduce the volatility of Bitcoin's price. Bitcoin can fall by 50% or more in a bear market. An ETF will do the same. It is not a stable investment. It is a high-risk, high-return asset. Fifth, the ETF market is relatively new. January 2024 was just the beginning. It is still unknown how these products will behave in extreme market conditions. Know what you're getting into. Market impact and what happened after approval. Let's talk about what actually happened after the launch of the Bitcoin Spot ETF in January 2024, because the market reaction was exciting. The first few days were actually a sell the news reaction. Bitcoin's price fell slightly immediately after the approval. Many traders bought Bitcoin in anticipation of approval, and when it finally happened, they sold. But then, the money started pouring in. Within the first week, new spot Bitcoin ETFs attracted billions of dollars. In particular, BlackRock's IBIT broke records, becoming one of the fastest ETFs to reach $1 billion, then $5 billion, and then $10 billion in assets under management. By the time Bitcoin hit a new all-time high of over $70,000 in March 2024, just months after the ETF's launch, many analysts were directly attributing the price surge to institutional demand driven by the ETF. The theory is simple. ETF approval opened up a huge new pool of buyers, institutions and retail investors who previously couldn't or didn't want to buy Bitcoin directly. All of this new buying demand pushed prices higher. Now, correlation is not causation. Bitcoin has many drivers. The April 2024 halving event also played a role, but the influx of funds into ETFs has certainly been a powerful force. And that's just the beginning. As more financial advisors start recommending Bitcoin ETFs to clients and more retirement accounts include them, demand could skyrocket in the coming years. Let's put it all together. A Bitcoin ETF is a regulated financial product that gives you access to the price of Bitcoin through a traditional brokerage account. No crypto wallet required. The SEC approved the first spot Bitcoin ETFs in January 2024 after a decade of denials. BlackRock, Fidelity, ARK, and others launched products on the same day. Bitcoin ETFs are important because they open the door to trillions of dollars of institutional and retail capital that previously didn't have access to Bitcoin. They're simple, safe, and tax efficient, but they have fees, and you don't actually own the underlying Bitcoin. The impact on the market has already been significant. Billions of dollars are flowing into these products, and Bitcoin has hit new all-time highs just months after approval. Whether you invest through an ETF or hold Bitcoin directly, the most important thing is to understand what you own, why you own it, and what risks you're taking. Bitcoin ETFs are not magic. Bitcoin is still Bitcoin, volatile, exciting, and potentially transformative. ETFs simply make it easier to access. And this accessibility? This is probably the most important development in cryptocurrency since Bitcoin itself. If you found this video helpful, Please like, subscribe, and share it with someone who is interested in Bitcoin but didn't know where to start. See you in the next video.